So, good evening. A quick update of Nasdaq. So, in my weekly analysis, this is the live stream before. I think I did it on Monday morning, early in the morning. So, I forecasted already we will have a very slowing and very low volatility week, and we have seen until now the predictions were correct. So that's now. But I'm not doing it only based on analysis, technical analysis. Much more importantly, I have prepared here a chart. If you can see here, we have different kinds of arrows here. So what are these arrows? First of all, we had today the Powell speech. He didn't talk about the economic outlook. The speech was about different subjects, but tomorrow he will do that. So the market is waiting for Powell's speech of tomorrow, and also the data will be released on Friday. Very important, but most importantly, what Powell is saying tomorrow, that matters, and that's really, really, really important, very important. So what are we doing here now? We see here the arrows. I have marked already the very key levels and the positions of the market. The orange one, these arrows, this color are the bonds. The green one is the dollar. This one is euro dollar. And this one is the move of the stocks. The big one, right? The big players of Nasdaq, meaning Apple, Amazon, Nvidia, Meta, Microsoft, Google, Tesla, Netflix, Oracle, and of course JPM. So because these few stocks are making a lot of troubles here with buybacks, whatever we see here, at the end of the last week, as the market turned off, we had also some important fundamental data, right? So the non-farm payroll, for example, and on the same time, a sell-off of the bond market, and the dollar started. Instead, the euro dollar rose higher, and on the same time, the market participants noticed this as a very good bullish hype, not anymore hype, but fundamentally solid. And we saw also some positive earning of the companies. This is this arrow I marked already. Now, if we go back to prove this, what is happening today, right? Keep in mind now first this picture, because this is very important, how the market will be developed. Maybe tomorrow or also to December. Therefore, the arrow colors. And this indicator, the low one, are the big players of Nasdaq, right? So once they are above zero, meaning we will have a hype, this one, right? And the indicator above, the red one, is the US dollar. If it's above zero, meaning the euro dollar is increasing, then this is the dollar index. The blue one are the three indices: Nasdaq, S&P, and RTY. And orange one are the 1 year, 10 year, and 2 year treasury notes or yields. Very important now. Now, first of all, I wanna play back here from this section. You see, until this time, the market was in a, until this time, we see here the bonds, the 2-year were short, but the 10 years and the 1 year were up. Nasdaq was down. S&P and also RTY were down. Dollar index was, the dollar price was high, but we had here the first divergence of the euro dollar. On the same time, on the stocks, we see then some expected very positive or more than expected positive, like Netflix, for example, Microsoft, and the last one was Apple, still here below zero. So we will play that a little bit. And until this time, the bias was absolutely bearish, divergence, bearish divergence. And then the market noticed that suddenly, and we see here now, the market noticed there's a big sell-off of the bond market already started. The dollar went down, euro dollar increased higher, Nasdaq, RTY, and S&P, the indices up. And we see now big increase in also of the stock market. And this happened already 2 days before the Powell speech. And now finally we see here, we had the optimal criteria to take some profit shorts and instead to go long. We see here dollar down, indices up, bonds down. And then from here, then somewhere here we had the non-farm payroll. So in this case, the technical analysis and the fundamental analysis went hand in hand. Until this price, about 15,154, which was the, I think on Monday evening. So the shares were higher. Also, the dollar went higher, and then the yield curves reversed again, going higher now, but we reached 15,300. So this was the first situation of this week, very key situation. Now we go back 1 week prior. And as the market was speculating that the Nasdaq will increase, we see here again the divergence of bonds. Dollar is up, euro down. That's good criteria, but the bonds are playing divergence. And now we had the optimal situation to sell the market here at the price of about 15,249, right? Keep in mind. Why I'm doing this video, this is very important because technical analysis is not giving all the answers, and we need sometimes, if we are, for example, in a downtrend, you see here now the curve is green because this is the long term, right? We are on hourly chart, so the trend is down, and we have suddenly a pullback retracement, and this retracement is making very big volatility, but is increasing higher, and that makes a lot of questions and stress to traders because we don't then know what is happening at this moment, right? So therefore, the technical indicator is not the only answer to trading, to good trading. Therefore, we monitor all the time, second by second, their global and fundamental factors, because the answers is in details. And we see here now a hype of the stocks already has been reaching here at the top. But if we look now very closely, we see that the dollar is increasing again. The euro is at about is going down a little bit, but suddenly the bonds start to rise, and now technically seen, we see here, I use this one, technically, we see here that we notice here higher highs, right? We have a local high here, then the next local high is here higher, and so on. We have then low lows. So, but the question is, should I trust to this structure, market structure? And the answer, my answer to myself, of course, I'm talking to myself, so I'm not making any recommendations, right? So the answer to myself is no. I don't trust this hype or this move, because fundamentally there are other forces of the market that are driving the price of the indices and also currencies, and also big powerful stocks and shares like Apple, Amazon, Nvidia. So there are trillion-dollar companies, but they don't have enough power to move the Nasdaq. Maybe for a short time, for example, if they retrace back, the more powerful indicators are the bonds. Why? Because the government and while we say people who are dictating that, they have the real power, so Nasdaq follows them, right? Therefore, I don't trust to technical analysis so much. I use it, but only at timing and if it's congruent to the fundamental data. Again, here we see instead here the market is making a local higher high and higher low. Some people would buy this, and I don't trust this bullish move, so I sell it, because the fundamentals are telling me clearly, crystal clearly, very clearly, open your eyes, we tell you it will go down, especially the bonds. The bonds are very important. And now we see after some times now, the supports are breaking down. So also the expression buy the support, sell the resistance is not existing here anymore. Now at this time here, you see here this arrow. Now look here. Suddenly in a downtrend where we have sell signal, clear sell signal, the bonds go down immediately. While the dollar is offset, the big stocks are running down. So we let the market run. But now we keep very closely until the US dollar makes a very relevant move. And this is the first signal that this bearish trend, right? So we know, of course, in the future or from today, we know what happened. The market came down here, but still, as we are still in this period, right? So you see here, we don't see any other bars. So this might be the future. And we have a clear signal. This bearish move will not last very long or for a long time unless the bears or the yield curves are in bearish tension, right? So we will have a confirmation to add a bearish position only if this sign is going up, meaning that our yield curve or bond section is against above the zero, but this is a warning. And you see, as the market is falling down, we have now the first divergence here. Now dollar is currently about a little bit above zero, but euro is going higher. Now the second sign of divergence is arriving, and also the big players are making very, very big move. If we keep an eye here, we see now the bonds, 10 years and 1 year are above, but the 2 years still below. So the market is playing something, or the market wants to tell us something. So keep in mind, the general trend is of course bearish, right? There's no doubt about it. Of course, the trend is bearish. But we want to take advantage also of the intraday, or maybe also the key situations of the market, right? So now suddenly you see here again, we are here at the situation before I mentioned at the beginning of this video. Now the bonds sinking down. On the daily chart, we have seen that the low of the bonds did at this day, they broke the daily low and also two daily low, and it was a massive signal that something will happen in the market. It will be positively, of course, not on 26th of October, but somewhere here, some hours later, I think 1 year later, 1 day later it was. But the question is, how did the bond traders knew that, right? And the answer is, the only conclusion is that there are a lot of traders who have, of course, better and bigger information. And as the bond markets are very sensitive, and also the US dollar is very sensitive, on the other side, the stock market react very sensitive to these two markets and these two indicators. So that will predict us a possible move in the coming days, right? So we have seen that again. So the rest is story. Right. Now, looking back, if we go back, especially Nasdaq, to see at the end of the year, of at the beginning of this year, we had Nasdaq also somewhere in March. It is the March of this year. We had first of all, the market was on a bullish trend, but somewhere here we had suddenly very, very clear signs in Nasdaq, exactly the same like we have now happened here, that we will have then a big retracement back. It was the beginning of the downtrend, of the uptrend, and now we are at the beginning of the downtrend. So also you see what's happened already in February of this year. The Nasdaq went back from 12,928 to 11,933, nearly 1,000 points. So if we go back now, much more here, During this whole period, we had only 3 times where the bonds were down, all the time the bonds high and also the US dollar high. And what happened? The market dropped down from around 15,700 to 10,000. And we had at the 10th of June, so more than 1 year of 2022, we had these positive signals already here, right? And I have marked also here. So as the bonds were up, the dollar down. So in a downtrend, we expected then a very big divergence, and it exactly happened all the time in these situations, right? So what I try to say is this hype at this moment, what is happening, it will last. So it's very important to understand this because the bonds are down for a short term, but the bias is already up. On the other side, we are in the US dollar in clear uptrend, but it is technical correction, so keep an eye on that. The Israel war is not over, the Ukraine and also the next recession prediction in Europe is beginning, and that will of course cause a lot of troubles in the stock market that will take down the market. And we have now at around 15,850 to 16,000. We have the upper gap. The market filled already the down gap at around 14,500. But during that time, at the market went down, it missed to fill the gap at around 13,700, 13,600. So now for the bullish move, right? So we have already a signal here. We need to wait now for the fundamentals. First of all, what's happening tomorrow, what Mr. Powell is was telling us. If he's talking somewhere in a neutral way, so we have to wait the data for coming Friday and then also the data of the next week. And as he said also in the last week, and that speech was very misunderstood by the market majority. He never said that they are going to cut the rates. So I checked this speech hundreds of times. He never tell that, but the market and the social media are talking about that the end period of rate hiking is has been reached and it's over. So don't trust those okay. So while trading, please work with stops, work with patience, and much more importantly, have a look then on the fundamental data. That's all much more important than the technical data. As you can see, we have here a big hike here, but can rapidly happen that this stock suddenly start to be sold again. Well, by whom? By big speculators, for example, right? By short-term traders who have already bought the stocks maybe somewhere here, and then suddenly they start to sell massively all the stocks. Why? Because the fundamentals for the next year is not so positive as it's mentioned on the open sources or the news, right? Um, Imagine yourself, you have a company, right? So you have a big company, you are exporting your goods to foreign countries, and now the US dollar is going up. Then the rates, right, for your credits are increasing, and this news will cause then and damage your account balance of your company. So the revenues are 90% of the companies had good earnings, but they announced immediately that the revenues for the next quarter will be very negative. So, and all these are already mirrored in these indicators, in these two indicators, in the bond market and also in the dollar market. So keep eye on that. Work with stops again. I tell again, please work with stop loss order. Right? If somebody is telling you don't use stop, he's not your friend. I'm telling you. And the protection of your capital always matters. So the expectations now, we have already broken 15,296. The market is pending a little bit, we see. So the powering behind of that is not too big to break that. If we break that, we possibly will come to the near of 15,400, 15,500, like that, right? Unless we have this construction or this pattern that the bonds are somewhere positive and the dollar is positive, we won't expect that the market will go higher. So a technical hype is possible for a short term, that the big speculators say, okay, you know what, we go then higher, we go then to we fill the gap at around 15,800 to 16,000, beginning of the 16,000, and then we start to sell, right? So timing matters, and timing needs time, and time needs and provides patience. So stay patient, give yourself a little bit time to mark the market to develop, watch closely, and then take your shot, whether you go bullish or bearish, but based then on fundamental data. So I hope you will have a good day and also good winning weeks. So I hope this time um, we can manage it better. I don't know. So everything can happen. Today, everybody was expecting what the market will do. Nothing happened. So tomorrow is also another day. And we wait now for the speech of Mr. Powell. Have a good evening.